What's up, guys? So this is going to be a short little video here talking about risk management in regards to a gambling algorithm called Kelly criteria. So why Kelly criteria is so good and why it has to do, in my opinion, with VWAP trading is because it is basically time diversification. If you can space out your bets over a certain amount of time, then that is going to give you smoother results. And there's a mathematical relation there. And this creates a chart with a hump to it. And there is a best amount that you should be risking. So knowing this, it's like, oh my gosh, if you've been winging how much you're putting into your trades instead of using a betting algo like this, maybe this will help you, because maybe you guys are putting too much or too little in your trades. But this is the Kelly criterion. So look, there's a maximal point, usually about 20%, but as your win rate increases, this may go up, certain metrics. But when it comes to calculating this formula, what you only need four things. You need 1, your win rate percent; 2, your average loss; 3, your average win; and 4, your total investment. So with these four things, you are able to calculate with ChatGPT in a very fast amount of time your Kelly criterion, and this evolves over time. So this is my current breakout dashboard, and what you can see on this dashboard is my win rate 55%, my average loss 68, my average win 168, and my balance here. So what I can do is snip this, put this right into ChatGPT, and simply tell it to calculate my Kelly criteria. And we're gonna watch this do its thing, and it's calculating my risk reward. So it's dividing my wins and losses here, getting 2.47, which is my risk to reward ratio, plugging that into the formula, and it's telling me that for maximum amount of gains with this edge of mine, that gives me a 55% win rate, and wins that are 2.47% the size of my losses, or 2.47 times the size of my losses. It's telling me to go almost 37% of my capital in these trades. But it's wise enough to tell me that most traders would use half Kelly or a quarter Kelly to reduce the volatility, because with this 37%, there is a chance that the account gets bombed. But there's also a chance of insane gains. Whereas with 18%, it's going to smooth that out a lot, and your odds of, or my odds, I should say, of getting this account off the ground will be a lot more assured. And then the same goes with 9%. This is a conservative number that I should probably be trading with. So if the account is 50K, then, I would only be putting about 5 to 10 grand in these trades to trade conservatively with this strategy that I've been doing. This was my dashboard a couple days ago. I unfortunately was microing into some rather important shorts, and so I had to take some baby losses here. But this was my dashboard just a couple days ago. And when I put this into I'll put this into the calculator, and let's see what my Kelly criteria is here. So this is a rather low win rate. It's very good that my wins were much higher than my losses, because that is not a sustainable win rate. It's also open to a lot of loss streaks when you fall below 50%. With these numbers, my Kelly is only 20.8. So that's a 17 almost percent difference between the last dashboard. So your Kelly is going to morph and change and evolve over time. And it's up to you to basically stay within your edge, remember what works, and stay focused on that win rate and keeping the losses small and trying to get those big wins. I know it sounds simple, guys, but small wins, small losses, big wins. That's what it's about. And if you're mindful about this sizing as your trading unfolds, you should see results, just like how I'm starting to see incremental results on this 50K account. So tell me, guys, in the comments, let me know if this information was useful. Just another way for you to take your trading metrics out of your hands into something that's a little more mathematical, a little more operational. But I hope you guys like this. Smash the like, subscribe, and tune in for the next video.